Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, I am going to reveal my income sources and all the assets and liabilities that I have. Now, I do this almost every single year. Earlier, I used to even show my trading profits, but now because I'm a SEBI registered research analyst, I am bound by some laws of SEBI that I can't show my portfolio and I can't show what I have with respect to my gains and profits because it might entice people to buy those same stocks. So keeping that aside, I try to revamp the episode today by saying, okay, what is my income sources? What is my assets? What is my liabilities? How I'm planning my personal finance? What are some good things? What are some bad things? And all of this is real data. So I'm going to start showing it to you one by one. Now, please note, whatever I'm showing you today is not from a standpoint of coming and showing off or showing you how much I have, etc., etc. No, that is not the main reason. The main reason is to show you how I managed my portfolio, what are some improvements I can do by myself, and that is basically what I'm showing. Okay, so let's quickly dig in and look at this. Cool. Okay, first we'll talk about assets because assets are very important in anyone's life. So I have two assets right now. One is a home. Both of these homes, by the way, in Bangalore. House one, I think made a YouTube video on it when I bought it some time ago. House one is I have bought a house in Brigade Orchards in Devanalli, which is I feel a very upcoming area. And when I bought it 7 months ago, I bought it for a price of 1 crore rupees, right? Today, the market value at that time it was around 7,500 to 7,600 rupees per square feet, all inclusive. Today, it is going at 9,600, 9,700 according to Magic Bricks. Either which way, approximately 1.25 crores is what the current market value is in 7 years. But that area is also growing very fast, and hence that was an advantage. But that is a hard asset. Second, I have another house which I just bought, I think a week ago. I put the down payment. This house is worth 1.9 crores. This is near, again in Bangalore, near Bagalur area, near Brigade El Dorado and all of that. Here I have not put any EMI. I am buying this flat upfront with full cash over a period of time, right? I've already done 50% down payment. Another 50% is construction linked. So over the next 2 to 3 years, I will be buying this flat as well, right? But this flat, I've got it at a much cheaper rate. I didn't buy it at 1.9. I bought it at a much cheaper rate, which I will show kind of when we go below. Apart from that, I have some gold. This is excluding my wife's gold. That because I anyway can't touch it. I know a lot of people consider their wife's gold also as their gold. I don't do that because I know I can't touch that gold. It's never going to come back to me. This is just my gold assets that I've kept accumulating over time as coins, right? Then my son's PF, which I will make a separate video on after this, that has grown to around 14 lakhs in investments. But in the last 1 year, the market has not given any returns. So the PF has not got any gains yet, but the 14 is still at 14. I think 1% up or something it is right now. So 14 lakhs is still at 14 lakhs. And this is an SIP that I'm doing for him. This PF, I will give it to my son when he turns 30 years of age. That is when I'm going to give this to him. My stock portfolio has reached 2.26 crores. Now, this is a very fun fact. Let me just explain to you guys. My stock portfolio had reached 2 crores a year and a half ago. Almost a year ago, I was at 2 crores. Actually, year and a half ago, I was at 2 crores. If you see one of my videos on YouTube, I had spoken about it, that it had reached 2 crores. But after that, last 1 year, I have been diversifying away from the market and building some hard assets or real estate assets, right? Now, yes, there is a logic here that you should go buy a plot and plot gives you more appreciation and all of that. I myself am not a guy who can afford to buy a plot. I mean, I can buy a plot, but I don't want the hassles of buying a plot. Somebody comes and sits there and all of that. You need political backing. I don't have all of that. So I just buy houses pre-construction, keep it for 2-3 years, or sometimes I flip it as soon as it gets constructed. And Bangalore is a hot market right now. So as long as this real estate bubble is or boom is going on, I'm enjoying my part there, right? So last year I shifted into two assets of a house. As I said, one was with EMI, one was without EMI. And stock portfolio, I've kept it as it is, right? Whatever cash flows I'm getting, I'm putting into that. And I'll talk about cash flows also after this, right? My US stock investments have gone to around 20 lakhs. I started here with around 14-15 lakhs. And recently I had made a video on AMD where I booked almost 100% profits of that, whatever I had invested there. That was my biggest holdings. So that gave a very good jump in my net worth in US. I am migrating more and more money into US now. I have realized that Indian stocks, I'm pretty diversified here. So this I want to now ramp it up to almost 50-60 lakhs over the next 2 years to have a 30% allocation in US and 70% in India, because I feel that if you see the market today, US dollar did fall down by 10%, the dollar index, but Indian currency fell down by another 5%, which I was not very happy with this year, right? But either which way, when I invested in US, I had invested at 84 rupees in March. Now it is at 89. I'm pretty sure in the next few years we will hit 95, 99 also. So I'm going to play that rupee diversification over there. So this is my asset. So my liquid asset is 2.68. My hard assets, which I cannot liquidate immediately, is 3.15 crores, right? Coming to the liabilities, as I said, the home loan is still going on the first home, which I bought a few months ago. That is at 35 lakhs is pending. Principal amount is pending. EMI I will talk to in the income sources. Car loan, I have two cars. Okay, one is a SUV, Mahindra XUV, and the other one is a Tata EV. Now, Tata EV I bought for myself to travel to office and back. Also, it gives me good depreciation because I claim it as a business, and it was less than 25 lakhs, so I didn't have to pay road tax. And EV has its own benefits as well, cost of charging, etc., etc. So I bought two cars. The first car, Mahindra XUV, when I bought it, was around 32 lakhs. I've been paying my EMI for quite some time. The principal has come down to 21. The Tata car, I just bought it few months ago. So that is still at 20 lakhs right now, 19 to 20 lakhs approximately. But my total principal liability is 76 lakhs, and my asset is 5.83, out of which 2.68 is liquid and 3.15 is hard. So I think I am covered enough on the liquid assets as well. I know I'm a little finance geek, so we look at it from current assets, current ratio and all of that. But my total net assets is around 5.7, removing all the liabilities that I own, because this is not mine, this is bank's money. So 5.7 crores is what I currently have. And my loan to asset ratio, which is 76 to my total asset ratio, is 13%. That means my whole net worth, only 13% is loan, everything else is in assets, which is good because I believe that everyone should take up more loans to build assets, as long as you can manage it in a good ratio like this, right? I have not overdone it and I have managed it in a very good way, and I will show you from my income sources how I'm managing it. But my goal is to keep this maximum. I would go here around 20%, not more than 20%. My loan to asset ratio would always be 20% and more, less. So now I'm at 13. I think I'm undervalued. I should be taking another loan to build assets. Sadly, most of my loan today is in car loans because I needed something to travel, which I feel it is a very big liability. Home loan, I don't look at it as a very big liability because by the time I took the house, it's also up 25%. At least that's appreciating over time. And it's still in pre-construction. But this house one is coming up in December. And in December, I will get the possession of the house and I will be putting it for rent. The average rent over there is approximately 35,000 rupees. I will talk about that also, right? I'll show my other assets. My other assets are insurance. I don't count it in the above. Medical insurance, where I pay a premium every year of 35,000 for me and my wife, around 1 crore. And life insurance, I have a 4 crore life insurance because I have a son and me. Here I have a fixed term life insurance, so I pay for 10 years and then I have this until the age of 75. So this is something that I've taken because I didn't want to keep paying over and above, because I thought that if my net worth goes up, but I took this few years ago. So I thought if my net worth goes up, I won't need to take more life insurance instead of paying EMI as a life insurance every year, right? So that is what I did. Now coming to the house calculations, house one buying price was 1 crore, house one current price is 1.2. Rental income once it gets ready would be around 35,000 is what they're looking at on the website for the other houses that are already giving it. It's a 3 BHK flat, quite a big flat. That's going for around 30 to 35k semi-furnished. That would come to around 4.2. Rental ROI, I don't look at yield, I look at return on investment. I have invested 1 crore. My return on this investment today is 4.2. If I do rental yield, this 4.2 would be, let's say, on 1.2. That would be as per market estimates at 3.5. But my cash outflow has only been 1 crore plus EMIs. So this would be 4.2 for me, and asset appreciation is at 20%. As of now, it is quite okay for me. House 2, I recently bought it. This I got it at almost 1.2 crores. Now it's at 1.9. But this was a different deal that I got with the developer, right? So that was a good appreciation over there. Now coming to the income sources. Now let me go one by one to the income sources to give you a deep dive into it, right? Now these are mota correct numbers, approximate. There can be fluctuations. Some months will be good, some months will be bad. I've taken just average of everything, so you can see it here. So one is YouTube income, how much I make from YouTube monthly. This includes the ad revenue of YouTube, the podcasting revenue of YouTube, and all of that. That comes to around 4.5 lakhs a month. I also have a YouTube community. So if I add all of this, it comes to around 4.5 lakhs a month. This is very good cash flow for me. In a year, that is around 54 lakhs that I make only from YouTube, right? Then I recently became a SEBI registered RA and we started our RA services. Over here, I have small cases. I have 7 bar. Small case Touchwood is doing very well in the market. We have the R7 bar as well, which is a swing trading community. And here, I think the average ticket price for this is around 10,000 rupees. 7 bar currently is closed, but small case we have it open. And around 10,000 rupees is what I get net to net on each purchase, right? Sometimes little less, sometimes little more. Average is around 10,000. So approximately I get around, let's say, 50 people buying it approximately per month, which gives me a decent return of a decent average of 5 lakh rupees, right? That is what I get from RA in this one. Then I get some YouTube brand deals. Now this, as you can see, has gone down quite a bit because right now the market is very thunda. There is no brand deals coming in the market. Both Instagram and YouTube, barely any brand deals are coming. So I'm catching an average of 1 to 2 lakhs because एक आध दो आ जाता है महीने में. So this is a 2 lakh income there, right? Then studio income profit. So basically I have another studio, as you know, it's called Studio Ionic, where we do marketing and branding services and all of that for other companies, right? They also manage my entire content creation, but I also manage for other big companies and MNCs in India. So there they have income, they have expenses, and then I take some profit out of that company every month. We are 3 partners there. So I get my share of 2.5 after all the expenses and the cash reserves are kept. Only then I get, so around 2.5 I get from that, and that's a good business that is scaling quite aggressively, right? And then I get a dividend of around 15,000 rupees a month. As you can see, my portfolio is around 2.26. So I am taking a conservative number, less than 1% on that. So that is something that I get. I've taken 0.8% dividend yield because I do get dividend from that company, and that comes to around 15,000. Obviously, this is taxed. All of that is taxed, but this is basically an average of what comes in the month. So monthly is around 14 lakh 15,000 of what I get from an income perspective, which is decent, which is good. But my main goal here was I'm a guy who's very weird. I don't like sitting with one source of income because I have seen fluctuations everywhere. I have seen YouTube income fluctuating. I have seen brand deals fluctuating. RA services fluctuate. When the market is bad, you don't make any money. Studio income also, sometimes the brands that you're working with are there. Sometimes those companies will leave you. It's a service business, proper services business, right? So all of this becomes very fluctuating, and this is the life of a businessman, is that every time the market keeps changing, but the more you diversify, the more your things become better. That is why last year I went really berserk on buying homes to build like a steady source of income, or just try to flip one house and get a good profit chunk as well, right? But the main goal here is to put them on rent for a few months and few years and make some kind of passive income source, because I was entirely dependent. As you can see, most of my income was coming only from the market, and in the last 1 year, market did not give any returns. My portfolio was all micro cap and small cap. It got really beaten down. Now it's back to parity. But that gave me a good shock and realization. US market was the only market that made me good money, but now I'm going to increase this to almost 40-50 lakhs now. I'm done with Indian stocks for a bit. I think I'm not going to over diversify on India right now. So this is coming to the income. Coming to the expense, as you can see, my office subscriptions, miscellaneous, I have TradingView, I have Screener, Tijori, 100 subscriptions I have. This is something I use for my RA desk, and it's a part of the expense for RA revenue, right? So every month almost 80,000 goes because we have quant systems. We've built our own software, so a lot of maintenance goes into that. My house rent is around 72,000 rupees for a 3 BHK I stay in. My car 1 EMI is 40,000 rupees a month. Car 2, the SUV, is 52,000 rupees a month, and my home loan is around 72,000 rupees a month right now. The interest component in this is very less because home loan is at 7% and all of that. So interest is not very big. Principal is quite high, right? Other miscellaneous home expense, we have groceries, house help, and all of that comes to around 60K. Travel and fun expense, because you know me, I can't sit in one place. I like shopping, I like going, I like eating, and obviously I'm making money, so I should have fun and enjoy life, excluding my travels abroad. But this is basically approximately a lakh that I just spend. And then my team salaries to run the RA firm, which is this. My team salaries per month is approximately 3.58 right now, right? This is including all my trading team, I have an in-house trading team, I have an in-house research team. All of them constitutes to 3.58. So technically, if I look at my RA desk, 3.58 plus this almost is around 4.3. So I barely make good amount of money on the RA desk. But the RA desk is a game of scale. As you know, anything in finance is a game of scale. Over 2-3 years, you make money, and that is the business I'm in, right? Assuming the market, touch wood, is good. The market is not good, that also won't happen. So overall, cutting everything, the monthly cash profit comes to around 5.8 approximately. So the yearly profit is around 1.09. On top of this, I will lose another 30-35%, maybe a little more because I'm in the higher tier bracket. So maybe around 50-60 lakhs is the final net profit that I would actually keep at the end of the day. But because most of my bulk of my revenue comes from stock investing, there I only pay less tax, either 20% or 12.5. It is lesser compared to what I would be paying on my active income sources, which is 35%, right? Now, coming to key ratios that I keep a track of for myself, liquid assets to net worth. My liquid assets to my entire net worth is 46%. My hard assets is 54. So tomorrow, if something really goes wrong in my life and I have to liquidate, I can liquidate my gold, my son's PF, my entire portfolio, US stocks. 46% of my entire net worth will come into cash straight away tomorrow, 2 days in bank account, right? So that is how it is. My savings to income ratio. Now, what is savings to income ratio? It's 41. Basically, how much am I saving, right, to the income that I'm making, right? So the savings to income ratio is nothing but how much am I saving to how much income I'm making per month. That is 41%. I believe that is not a good number. I should be at 65%. And if you actually look at where most of my money keeps going away, so if I remove the car loans first, okay, if I remove the car loans, this goes up to approximately 48. And obviously my RA service desk also takes a huge amount, right, which is the 7-bar program and small case. All this takes a huge amount, but that obviously will become better over time, is what I'm assuming, right? So that's a bet I'm taking, but this I need to push it to 65. Key recommendations for myself, I think rental property income should kick in next year. Somewhere around December is when they'll give me possession. I'm pretty sure it'll get delayed because every time it gets delayed, but whatever it is, I can buy another property slash plot for not plot, but another property for rental income. This is something I can do only because my loan to asset ratio is around 13%. As I said, I want to take another loan, but I don't want to take a bad loan. I would say this is a bad loan, absolutely trash. And recently I broke my leg. I mean, I injured my leg quite aggressively by playing cricket. So in the last 1 month, I've been traveling by taxis and autos itself. And I'm enjoying traveling by taxis and auto. I've not even driven the car. But this is definitely a bad loan for me. But this is something that I'm trying to go, right? Now, coming to what am I doing with this? So my investment plan also, I will tell you. Out of that 5.8 lakhs that I have, this is how I split my entire money, right? Mutual fund SIP. So I have recently started doing a SIP into mutual funds only because I feel I'm over diversified directly on stocks. I feel I'm going to be over diversified in US as well. So I thought, let me take a slight diversification into mutual fund SIP. I have started mutual fund SIP only in one mutual fund. It's a new NFO that has come out by Geo BlackRock. Okay, so basically what I'm doing is I'm doing an SIP of approximately 1 lakh every month. And because it's a flexi cap fund, I'm not taking a very high number. I will take a 14% number here, not 25 or not 21, or some people take 17, 18. I will take a very bad number. And today I'm 33 years of age. This is for my retirement. So that is, let's say 60, assume I'm very old by 60. 27 years is left at that point to invest, right? So investment amount would be 3, estimated returns would be 27, my total value would be 30 crores. Now, I know most of you guys watching this video will be like, Shashank, 30 crores is too much. It's awesome. It's great. You're a crorepati. But let me please explain this. It is not exactly how things seem to be. Because 30 crores is great today if I had it, but this I don't have today. This I will have after 27 years. Now, if you look at a normal 2 to 3 BHK house in Bangalore today, even in a decent place, live inside Bangalore, I'm saying outside Bangalore, Hebbal side or whatever, it is going to cost you anywhere between 2 to 3 crores to buy a 3 BHK. A decent 3 BHK will cost 2 to 3 crores today. Now, let's assume that inflation and real estate prices grow by 8%, right? That means every 6 to 7 years, the real estate prices would double, taking a very low estimate without any boom and all of that. If that is the case, and if let's say we have 27 years left and we're compounding by 8 times, at least 3 times the compounding will happen. That means a flat of 2 crores or 3 crores will become 6. Okay, 6 will become, again it will double and become 12. 12 might become 24, right? And it's highly probable and highly realistic that the real estate rates 27 years into the future, today whatever we're at 2025, this is 2050 ke aspas, If today it is at 3 crores, by then it will definitely be at 20-25 crores. So if that one 3 BHK is 20-25 crores, I'll have 30 crores at that point, right? That because the rate of, I don't know why, but the rate of inflation and rate of real estate and rate of affordability is going faster than the rate of compounding, I feel sometimes. So that is why I feel that even 1 lakh, today 1 lakh is a big amount. It is not a small amount after tax to pay 1 lakh into this, right? But yes, there is a caveat. I will have to keep increasing this 1 lakh by 5-6% every year, do a step up. Only then I will be able to beat inflation consistently, right? A lot of people do this math and say, okay, 30 years when I'm 60, it's great. I keep telling that by then the expenses also will become so stupid that a crore will not have value in 25 years. In earlier times, my father's time, 1 crore was crorepati used to become a very big sign. Today, 1 crore mein you don't get a house also. 2 BHK bhi nahi milte 1 crore mein. It is so bad in Bangalore or anywhere in the world, right? Or anywhere in India also, for that matter. So that is something that I need to really increase. The baby SIP has actually gone to 50. I think this is consistently good. And I'll do a separate video on the baby SIP as well about how it's panning out, what is the idea there, what is the components of it. And the investments long term, this will go into my long term basket of 2 lakhs, out of which 1 I will put in the long term basket, 1 I will put into US stocks. And then I'll keep free cash for dips. This is my biggest strategy, which many people don't do. 2.5 lakhs every month I keep it aside in an arbitrage fund or just in my savings account. Wait for the market to fall. If the market falls, all that accumulated money, boom, comes into the market at lower rates. Usually it goes back into buying my stocks that have fallen down a lot. So this is the entire strategy. So I just wanted to show you how things basically I'm doing, right? Not to show you just the numbers, but to show you how I've actually managed everything over here. Obviously, I would not say this is the perfect portfolio or you should follow this or this is amazing. I'm also figuring out many things as we go. But from an overall standpoint, this is how I think. I know I can take a little bit more leverage now to build more assets, and that is what I've been doing constantly and consistently, right? So I hope this video got you some knowledge, and I hope you guys enjoyed this. Again, if you have any doubts, any questions, you can put it in the comment section below. Thank you guys. Take care. See you. Bye bye.